Chamath Palihapitiya is my favorite billionaire. I wanted to bring you some of the highlights of his recent interview on Bloomberg, where he talks about Tesla, gets into Bitcoin. I'm going to link down below to the full video as well as all the different sections. So if you want to jump ahead, go for it. Let's get to it.
At Tesla, today, through that lens, is that stock a buy with a market cap north of $800 billion?
The short answer is yes. The reason is that I think it took people, look, I bought Tesla in 2014 or 15. I was one of the largest owners of the convertible debt. I felt that was the best margin of safety way to bet on Tesla. It's turned out to be an enormous winner. And I really believe in what Elon is doing. I think he's the most important entrepreneur of our lifetime right now. It's taken people 15 years to embrace that they're going to be now a legitimate car company. But when I underwrote the investment, my bet was on something bigger. And I think that Elon is well past building a car company. And I think it'll take another 5 or 10 years for people to figure out what this next arc of innovation is. And what that is the deregulation of energy. If you look under the hood, utilities spend tens of billions of dollars, hundreds of billions of dollars a year all around the world on CapEx. They are completely regulated. They feel completely safe. They feel like they can issue debt ad nauseum. They can cause all kinds of damage to the environment or otherwise, look at PG&E and still come away unscathed because they're protected. Except that something is happening that nobody forecasted, which is the complete bottoms-up disruption of energy. And that's the only way that this thing is going to get deregulated. It's not going to be by law or dictate. It's not going to be, a big monolithic competitor. It's going to be because every home installs hydro panels, solar panels, batteries, and then software that basically allows them to live off the grid. And then eventually pump their excess energy into battery solutions and other things that are controlled by cities and towns and governments, who then in turn will turn off their usage of peakers at a minimum. And then over time, will have very different characteristics of usage from traditional utilities. That is what Tesla is powering. That is what allows it to be a multi-trillion-dollar company. So does it have the same return profile as when I bought it at what is it equivalently now 25 or 30 bucks a share? Well, obviously not. But can it be multiples higher than where it is today? Absolutely.
Wow. You think about that and you think about, wow, do you think he had that whole vision at the start of Tesla? Really? Could he really have had that whole vision of disrupting energy at the start? Maybe him and Elon did, because boy, wow, that's something. Whether or not Tesla's ever actually able to do that will dictate if Tesla is a multiple of its current value, I guess. But that vision that Chamath has, and obviously that's been the run of Tesla, is this idea, him betting on who I completely agree. Elon Musk is the best, what I call jockey. He's the best jockey, the best entrepreneur in the world. And Chamath obviously made a huge bet on Elon wisely, very wisely, and they've been able to pull this thing off.
Can I tell you something about Bitcoin, which is so important? So I think Bitcoin is very important because it just shows the fragility of, the traditional financial infrastructure. And if you just look at the quantity and the size of like the M2 money supply as an example, the real question that I think people should be asking ourselves is, okay, if Bitcoin becomes a de facto reserve currency that basically displaces gold, what replaces the US dollar? And here's where, if you want to just bear with me for a second, it's not Bitcoin that replaces the US dollar. It is a stable coin. And what does all of that mean? In less fancy language, there are companies around the world that are replacing one fixed US dollar with one digital token of a US dollar. And by simply making that small abstraction, they're able to completely build financial rails that didn't exist before. On-ramps and off-ramps to trading, to asset management, to banking, to payments processing. There's a revolution happening. It's not felt as much in the United States because people don't see it because the financial services infrastructure is so robust. But when you look in the developing world, and if you look in any market where there is any form of currency manipulation or currency instability, that's the future. And so, Bitcoin is a canary in a coal mine for a completely virtual, largely anonymous, and we can debate whether that's good or not, financial reality. And so, I think that it's a very important trend that's worth understanding. The other thing is, so many of the dislocations that we've seen won't happen anymore when we go on those rails. So, going back to this whole GameStop debacle, as I've learned more, and as you probably know now too, a lot of this has to do with the arcane way in which stocks are settled. And what I learned was we used to have a T+3, after the trading day, 3 days later is when you'd settle. And it was moving heaven and earth, crying and screaming to move companies to go to T+2. Well, if you're running a stable coin or, smart contracts on top of Ethereum, all of this next generation infrastructure, this is T+0, right? You're settling things in a nanosecond. And that's really good for everybody.
I think Chamath just sees the world as it can be in the future. And so many in the financial services industry and the financial industry in general are just seeing today and the previous 30 years. They have no vision like Chamath does of what's going to happen going forward.
Cryptocurrencies, digital assets, are you a holder of, are you a believer in?
Well, I will be publishing this soon. I am building a fairly sizable portfolio of what are called NFTs, non-fungible tokens, some digital art, some virtual trading cards. And these may sound crazy to some, but I do think that that's the next frontier of digital currency and digital assets.
Super interesting. NFTs, if y'all don't know, those are like items that are on the blockchain. So he said art. So you can have, for example, you can have Pokemon cards that live on a blockchain, and there are maybe a limited number. Maybe there's only one of a particular card. So a person in theory can purchase that card and then sell it to others, and it's going to all be tracked on the blockchain. So the NFTs are something that's coming. And again, Chamath is ahead of the curve here, just ahead of the curve.
Why were you so excited by the GameStop short squeeze and then so outraged when Robinhood had to throttle buy orders?
Look, on the way in, I think what GameStop showed was the narrative fallacy on Wall Street. I think for years, there was these folks that sort of, were these wizards behind the veil. And they had a way of conducting themselves that purported to be just intellectually superior to everybody else. But in reality, what that short showed was that they were prone to the same, poor decision-making and broken systems and technologies that everybody else has to deal with. And so I found that kind of funny. I think it also spoke to the fact that, we really haven't looked closely enough at the systems that were broken as a result of 1998 and LTCM, long-term capital management, then 2006, 7, and 8 with Bear and Lehman. And we're allowing the same problem, slightly different, but roughly the same problem to repeat itself over and over again. But just the stench of this whole thing just goes to show you, back to where we were talking about before, about how difficult it is for normal, everyday folks to have access to any kind of return. So if we break down the capitalist philosophy, they are just fundamentally stuck in this cul-de-sac of always being labor and always being sort of at the, ownership of capital, of the ownership class. And the fact that normal folks can't get access to returns and, close the inequality gap is just going to make all of the things we're dealing with today a lot worse than they already are.
Wow. It's so clear. He's just amazing at breaking stuff down. He really is. And just how he's able to in that moment just say, look, hey, it's about working class people having access and being able to get a return on an investment, and the inability of the average retail investor to do that. And I think Chamath just puts it in a way that is it's just clear. And what we actually get from Robinhood and these other apps coming in, and the availability of different models like Master.io, where you can buy portions of paintings and stuff like this, getting access for the average person to invest in different types of investments and having that available to the average investor is a big deal. And I think Chamath puts that and understands that better than anyone.
Where do you stand on hedge funds as a group of actors and the role they play in modern finance? And also the other thing that came up in the context of this situation, short selling.
I think hedge funds are a really important part of the financial infrastructure, and I think that they should exist, and I hope that the ones that are good can thrive. But I also believe that disclosure needs to get improved. I think in every other part of society, as the internet has become more sophisticated, as software has become more sophisticated, things have erred towards real-time disclosure of everything in every market. It's just not true in finance, where people are able to sort of use the rules and bend them to obfuscate the truth. So, for example, there was a rule that the SEC was considering where you wouldn't have to publish your longs anymore on the same frequency. To me, that's nuts. I think that actually, we live in a world where your longs and your shorts should be published in real time. Because again, what separates you should be your analysis and your interpretation of the facts, not obfuscation. Another thing is that I think that you should be, forced to disclose the margin that you're running and how much leverage you have. And, I think that hedge funds and banks are no different. They're a critical part of the financial infrastructure. They should be treated in the same way. In terms of short selling, I buy the fact that it's an important part of the market, but I also think that, now in the world of social media, and we've seen this recently, disinformation can be used to not just cause political damage, but I think disinformation can also cause economic damage. And so I think that the SEC is going to have to deal with that issue and figure that out. How do we manage information or interpretation or sensationalizing of things that all of a sudden can whipsaw the markets up and down? And these actors, how are they regulated? Are they allowed to just say whatever they want and the implications are what they are? Or is there a higher standard now that there's so much distribution for so many more people?
He cuts right through it. It kind of a surprising answer there on the short sellers. I think a lot of you probably are saying, oh, why isn't Chamath against the short sellers? But he's there to tell you, hey, it provides a function. Short sellers have a function. Short sellers can actually bring to light bad companies, bad actors, CEOs that are acting inappropriately, companies that are acting inappropriately. We've seen it again and again and again where short sellers highlight bad actors. So I don't think there's anything wrong with short sellers. Chamath is saying he doesn't feel there's most times there's nothing wrong with short sellers. It's a vital part of the market environment. But transparency, again, he just hits on the right issue. It's about transparency. If the markets were more transparent, the more transparency we have, the better and stronger these markets are going to be. It would clean up 90% of this garbage.
Apps like Robinhood and the way that they've gamified, and you've heard that term many times, trading, not investing, but trading, is a healthy thing on balance?
I think that it should be allowed to exist. I think it's healthy, not particularly, because I think it keeps people in this ghetto of being labor. And I think that a lot of retail, a lot of normal people, the only way they will close the inequality gap is because they take it upon themselves to learn how to become an investor. The government's not going to save them. No law is going to save them. No, taxation of the rich is going to save them. They can save themselves. And you have to learn how to invest, which is to put money into the things you care about and then do nothing.
100%. Man, he's just right. He's right as rain. And I think also we get into a little bit here is that without learning and that time involved, look, when we all start trading, we all lose tremendous amounts of money usually at the beginning because we're stupid. But the only way to get past stupid is to learn. And I think what these apps do, like Robinhood, is they get people in the game. And the only way to learn is to be in the game.
Tell me, from your perspective, is there a limit? Is there a limit to what you can do with SPACs? Is there a limit to the size of the SPAC revolution in terms of available capital or quality of targets?
I think what's happening in SPACs is really about the dismantling of the traditional capital market with respect to fundraising. So the equity capital markets, really had one go-to move, which was the IPO. Using the language of inequality, it evens the playing field. It democratizes access to high-growth companies. How? Because it allows retail and it allows long-tail institutional investors, folks that may not have necessarily been tier one hedge funds. Now they can also play. They may get allocation in the original SPAC IPO. They can go buy in the market as soon as it goes public. They can participate in the pipe. They can buy after a deal is announced. So many opportunities versus one allocation in a book building process that a traditional S1 process was all about.
So right on with the SPACs. Look, do I think there's a lot of garbage SPACs out there? 100%, like 1,000%. Here I'll link to a video I made about one of the SPACs that I think is not so great. You guys can make your own calls, but you think about this and are there going to be garbage companies coming public through SPACs? 100%, definitely. But it allows a whole lot more companies to come through the process. Obviously, you're going to have winners, you're going to have losers, but it opens it up even more. And Chamath just talking about this, it's about free markets. It's about allowing these markets to function, allowing people to make decisions, get in the game. There will be winners, there will be losers, but overall, you're going to have a more vibrant market, a more free market, and allow more people to participate.